Hello. Welcome to another live session from Forex Trading Wizard Academy. Last day of trading week, almost nearly end of the month. So we will be looking for XAUUSD and also some other instrument that might be trending. We can see that especially XAUUSD, most likely we could see some downward pressure here, as I have posted analysis early today. You guys have seen that probably. So we'll be looking to see currently what kind of opportunity you might have in this instrument. We have seen there is a strong rejection from the top with a very strong bearish price action. Now expecting for the market to drop back again to the support level, and this is where there is a that if you look at the daily chart, we can see there is a daily support level here. There is a gap open, and with that gap open, expecting now XAUUSD to come back down again to the support level to see how the market might be doing here. Now overall picture, we can see the market potentially we could see that potential reversal here. You can see the market had a very strong breakdown from this level, where there is also a neckline here, and with that breakdown, what I think that we might see potentially the market may drop back to the support level. Now it's a probability, anything can happen. So we'll, once we see the price action confirmation, then we will be looking for entry opportunity with proper risk management. So let's begin, and in the meantime, if you guys are here, give a thumbs up, and also don't forget to subscribe to the channel, and you can say yes on the live chat. If you're here, join me personal group. What do you mean by join me personal group? So thank you for joining, and guys, if you are here, give a thumbs up, and don't forget to subscribe to the channel if you haven't done yet. So let's look at to see first of all, we will be looking at XAUUSD, and this instrument expecting for the market to slowly drop to that support level where there is a high liquidity. And looking at the 1 hour chart here, first of all, I will be looking at the multi time frame approach, looking at the monthly chart to see how the price is doing. Now from the monthly, we can see that this is the monthly price action, where I would like to do first multi-time frame. Looking at bigger picture always give us, especially in terms of trend, it's easy to identify the direction of the trend if we look at the bigger picture. So looking at the monthly, we can see that this is the monthly impulse from here, and with that monthly impulse correction, and we can see another impulse here, and with that monthly impulse correction, expecting for the market to remain bearish here. And with that said, looking at the weekly chart here, we can see that from the weekly, previous weekly candle has formed a healthy body with a long wick at the bottom, and this week you can see that it almost moved almost equally on both sides, to the bottom and to the top. So therefore what we can expect here is, as you can see, the market is approaching the weekly opening and closing here, and from this zone we might see a potentially a bounce, little bounce. What I think that as we are almost nearly to the end of the week, the price action may remain bearish, and it may remain bearish to the support level here, where there is a weekly 20 EMA or even further lower side possible. Looking at the daily, now daily price action, if you guys look at it, you can see that from the daily perspective, this is the daily bullish candle that we have seen yesterday, formed with a retest of the 20 EMA, and after that the market tested, and we can see there is a rejection again from the daily perspective here. So again, daily price action, where you can see the market tested the daily 20 EMA and then started to move in that direction. So therefore expecting for the market to come back to the daily. Here you can see this is the daily liquidity zone, where there's a gap open and with a strong bounce, wanting to see the market is coming back here again to this, potentially to this support level. Now looking at the 15 minutes perspective here, I will be looking at now very lower time frame, as we have seen, the directional bias is potentially towards the downside, and this is a resistance line here. So therefore we will be waiting for the market to go ahead, a retest, and then to drop back again to the support level. So what we can expect here is for the market to go ahead, potentially to grab liquidity and then to drop, or we might see sideways movement and then potentially drop. So here we can see there was a sudden breakdown and narrow consolidation. We have seen another breakdown. There is a, you can see there is a bigger consolidation here on the 5-minute chart. So we will be waiting for any break of this high. And looking at the 1 minute, now when we're looking at the 1 minute, we can see the market in this 1 minute chart. Here is, this is now you can see that this is an important level of resistance here, a support here, and expecting for the market to go ahead and then to potentially reverse. So let's see how the market does. The market will never follow how we expect. The market will follow its own way. So we will be waiting for the confirmation from the market to see how it might be evolving. Let's look at to see, let's start some music. So if you guys join here, you can say you can like this stream. Thank you, welcome. And so this is the 1 minute chart. Here we can see the market forming, here is series of higher low, and with that series of higher low formation, expecting it to go ahead, potentially retest the resistance here. Okay, so you can see the market is potentially moving up to the resistance and then to return again in that direction. So we can see the sideways movement here in this area. So with that sideways movement, if we look at here, you can see the market moving in a sideways, and with that sideways movement, expecting for the market to potentially to break the high and then to return in that direction again to create a new lower low. So looking at the, if you look at the 1 minute again, we can see the market in this 1 minute chart here, it's in a sideways. So here there is no entry because it's in a purely sideways market. It is not a good idea to find an entry in a sideways market. So once we see the market started to trend again, then we can look for entry opportunity. Until that, patience is key. Thank you, welcome. About gold 2634, will it come back to that price? No one knows. Okay, so that's how it is. So trading is all about probability. No one knows either the price will go back to that level or no. But the most important part here that we need to look at is, this question I got very often, that asking, the price will go there or come here, which is, I also ask myself when I begin in the beginning of my trading. But here, the most important part, guys, keep in mind that understanding how the market will react to certain level will determine by how the price is hitting to that level or going to that level, which is very important. Let me give you an example. While the market in a sideways, this is where you will be learning the real trading, guys. So before I discuss this very important education, make sure you like this stream. Did you like? I see the likes is almost less than half of the view, so smash it, and you can note down that we are discussing. It's a very important point. So for example, let's say you found an important level that you want to understand that how the market might do with that level. If it is an important level of resistance, let's say it's an important level of resistance, and with that resistance, okay, so now the price is not there, right? So the price is still not there. So how do you understand how the price might do in that level? There are two ways we can understand. One is to look at how the price is mostly reacting to that level, especially if you see the price is hitting to that level with a huge ATR candle. You can note that down, it's very important. So if the price hit that level, a key level, with a bigger ATR such as 2 ATR or more than 2.5 ATR, okay, the chances that it's gonna be high chance, not guaranteed, the chances that the market might be this might be a false breakout. Okay, so we might see the market reacted to that level, and we might see the price has got rejected from that level. This is one probability. Okay, so when we see the market hit that level with a bigger ATR. Now the next way that it can happen is, if you look at here, you can see, let's say if the market is moving with a smaller candle. Okay, so let's say the market is moving with a very narrow and a smaller candle formation like that. With smaller candle formation and going to that resistance line, that's where the chances that the market may break this resistance and could go back up, penetrating that level, and could continue to rise from that level. So that could be a one scenario, that when we see the market hit such an important level with a smaller candle formation, that's where we could see the market is penetrating that, and we could see the price is penetrating and going back up. So this, when we see a bigger ATR hit, that's where we could see a false breakout and we might see rejection. If we see that smaller candle formation and hitting that level, we might see that the market penetrating that level and then going back to the upside with a stronger momentum. That could be a probability when we see the market is in a if it is forming smaller candle hitting that important level. So there are two ways that we can understand either the market might be in a real breakout, or maybe it's a false breakout, depending on how it might be forming. I hope that you guys understood it. Let me know if you have any question in addition to that. So here is what we can see. This is where the market, you can see locally trying to bounce here, and with that bounce expecting for the market to go ahead and then moving up. We could see the price, if we see the market move that level, okay, so cross that, and we might see the price is coming back again towards the downside. We'll see how far it might be going, and based on that we will be looking for trading opportunity in the market. So let's see how it might be doing. So looking at here, okay, so here you can see the market slowly trying to move up, and I'll be waiting for a price action confirmation for any entry here, and then we will be looking for to see how the market might be doing based on that. And in the meantime, if you guys are here, you can say yes so that you know that, and let me know if you have any question. As last day of trading week, we see that it's a big week and we are almost at the end of the year. As we discussed in our previous live session, this year on 2025 we will be launching AI trading system, and you will find very soon on the website. Currently it's not on there. We will be launching AI trading system for the retail trader. As what I believe that uh, in the upcoming years, it is essential as a trader to have an AI trading system, because everything is moving forward. And as you know that there's a prediction for a huge job cut due to AI coming up, which is now trending very aggressively. And what I think that if we have successful AI that is more being updated, and if you have a system, okay, so that you can rely on, that can change the way you look at the market. So this is my mission here in Forex Trading Wizard Academy, to give to help retail trader use AI trading system so that they can use um, use it as a substitute for their 9 to 5, or even as a secondary source of income. So stay tuned for that. For those who are member here, will be able to access the AI that we will be using in the academy. So let me know how many of you are really passionate about becoming profitable as a trader. So along with the manual trading, so if you are a beginner as a trader, that I wouldn't recommend to trade on AI. But if you are a beginner, then the first step is to go through the foundation trading course, and then going through the advanced trading course, and then to think of using any AI trading tool. Okay, so this is where we will be working on equipping, like training the retail trader. For those who are coming here in the academy to learn and grow as a trader, is to teach them the foundation, and then the advance, and then trading with AI trading tool, so that they can cope up with the advanced tech coming up in the upcoming years. So it's essential. Now, if you either you like trading on AI or no, this is what something that we need to slowly get into it, because that the time is not if every trader started to become smarter and started to trade with advanced trading strategy, you may not be able to remain always in the same place. So that's what we will be keeping all door open for the traders, so that they can learn and grow as a trader. So if you're someone that really passionate about trading, then don't miss out to stay connected with us. And in the beginning of the year, it will be launched, and you guys will be able to access, and everything will be available very soon on the website, so that you can get access to it. So let's look at that here. Okay, so here in the local time frame, you can see 1 minute chart from here. So some upside bias here. Now it is an important question to look at either the market again remain bullish or coming down here. As if you guys look at it, you can see this is an important support level here. So it's important support level here, and with that support, okay, so you can see this is a resistance here, which is turning support here, expecting for the market to come back here. This is where there is a high liquidity. Okay, so the resistance turning support, which is an important support level. So therefore, expecting for the market to drop here to see if you can see there is a rejection here on the 30 minutes. So that might push the price again some upside here. Now it is important to see either, because if it is forming a reversal here, we might see again going back up. So until we see this kind of price action, doesn't look to me very bearish here in that area. It might drop again in that direction, so we'll be waiting to see that how it might be doing. At the moment, we can see, if you look at the 1 minute chart, we can see the market in this lower time frame. This is where we can look for that entry in that area. You can see this is the 1 minute chart, and with that 1 minute price action, okay, so you can see the market slowly trying to break below. So we can see a very strong rejection from the top, and with the rejection, expecting for the market to come back to this support level here. Okay, so here is the 15 minutes, and we'll be waiting for the market to have a strong rejection. We'll see where it is heading. So we can see a rejection in that area, expecting for the market to yeah, you can see it may move up a little further again. So with that in mind, until we see a clear direction, I will not be entering any position at the moment. We'll be waiting for the price action confirmation, and then we will be looking for that entry opportunity. See how far it might be going. This is on XAUSD. Anyone is looking at any other instrument, guys? Mine's getting, sir. Thank you for everything. I can't wait for what I am able to analyze the market very well, but I am usually afraid to execute the trade. I don't exactly define it as a bot, so it brings a little bit of negative connotation. The tool that I am using, the AI trading tool, is basically it's not fully automated. Guys, keep in mind that there are two things that we need to understand. Is that a bot is the one that normally has a negative connotation in it, and a bot is the one that you don't have control over. Most likely you put on the chart and it just trade for yourself. But the one that we will be using, also you have AI, is the AI is basically the strategy that I am trading, that I have, is automated. So it's just the automation of the existing strategy. So let me give you an example. Let's say this is the 1 minute chart, right, on XAUSD on gold. Now trading on 1 minute sometimes very difficult, right? It is difficult because it's a very short time frame and very difficult to especially the manage risk. Now managing risk is key, guys. Keep in mind that most traders fail because they don't know how to do the risk management. And if I give you an example, let's say you sold from here. Okay, so this is your selling zone. You put a stop loss, and your TP target is here, right? So now if you are trading on lower time frame, such as the 1 minute on XAUSD, Now this is when the market in a downtrend, and there is always an entry criteria when we are using a strategy, right? So you need an entry criteria when you are using a strategy, right? So this is, let's say you are selling from here, okay, and you have an entry criteria. So the entry criteria could be that the market, for example, need to form this kind of price action, and then there has to be another candlestick pattern. It depends on what kind of strategy you are using. So therefore, if you look at any market, for example this one here, okay, so, or this one here, depending on what kind of strategy you are using, every strategy has an entry rules. Now when you are trading on lower time frame, you can trade on higher time frame, but uh, for high frequency trading, if you are day trader, sometimes we need to jump onto the lower time frame. And when we see that, let's say the 1 minute candle, in the last 10 seconds you might see a candle formation that in the first 50 seconds of this candlestick pattern, okay, first 50 seconds the candle may be not according to your strategy. In the last 10 seconds it's closed with certain kind of pattern that you are looking for, right? So now you need to make a decision during this 10 seconds, split decision that you need to make to enter into the trade. Am I right? So therefore, if you look at a market, let's say this one here, okay, so um, if you look at this market as an example, this is bullish engulfer. Now when you are looking at this is a nice trade, right? So if you look at this one, the price crossed the 20 MA. It's an uptrend, a very strong impulse here. Okay, now let's replay the chart to understand what I'm trying to explain to you. Okay, so let's replay this candlestick pattern. Try to understand, guys. It's very important to look at. See how the candle has formed. Let me repeat again. What do you see? Let me repeat multiple times. You see what happened when the candle open? I'm repeating multiple times. You see the price open here, drop back here. This is a 1 minute candle, so you have a very short period of time. You see the market drop here and then bounced again. Okay, the price open here, drop back below, and then cross above with a bullish engulfer. Okay, now this is where the key, right? Now this, when this candlestick pattern formed, if we look at, okay, you see the market drop here, and then probably in the last 10 seconds the market has gone up and closed as a bullish engulfer. Now during that time period you need to make a split second decision, that very difficult sometimes manually, to place the proper stop loss, take profit target, everything, right? Now what if this strategy is automated, right? Automated means that there is, as I mentioned, there is a negative connotation on the bot. We are not using any bot. We are just automating. We are just creating an automation of our manual strategy. It's not a bot. Okay. Now what the strategy is going to do, the AI, is as soon as the candle close, it will check all the rules of the strategy, number 1, number 2, number 3, number 4, the criteria. If it fulfills, it will open a trade here. It will play the stop loss. Let's say you set the risk 0.25%, which is much more safer than your manual trading, because the strategy, the AI is not going to make any mistake. manual manual trading can make mistake. You will place the stop loss here, entry here, and then take profit target. You might put 3 times, 4 times, right? So that's a huge risk managed strategy. Am I right? So therefore, when you are opening manually, there is a high chance of inaccuracy in the trade. While you are using that strategy automated, that's where there is a high probability to be accurate. But at the same time, the strategy has to be proven, and that's where it comes down to understanding and having an experience as a trader, understanding the trend, having an edge in the market, which is very, very important to be profitable as a trader, to have an edge. And that is why it is important that, guys, that you are not relying on any kind of bot. I don't recommend, and that you don't know that the goal here in the academy is to first teach you the strategy. Okay, you know the strategy, and then once you know the strategy, then it is automated, right? So that's where you're gonna learn and grow as a trader. So you will be using the AI system, and at the same time also learning the strategy. I hope that that makes sense. If you guys are enjoying the live session, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every single day. So here is what we can see, that on the lower time frame, the market has made that bounce, and you can see here, in fact, if we look at, you can see there is another trade here. Okay, there's one trade here. So also with the AI system, it is less likely that you're gonna miss trade, because if you are looking at, let's say, 1 minute or 5 minute chart, sometimes it's very difficult for you to look at, wait for the candlestick pattern to form, and then entering into the trade. Except if you are trading on the higher time frame, that's okay, you can do it. And in the beginning also, I highly recommend to trade on the higher time frame until you learn it, and then once you become very good at it, then you can look at the lower time frame to trade the market. I hope that you guys like live trading, Robert. Yeah, absolutely, thank you. It is essential. Okay, so here is what we can see. This is the, if you look at, let me close that part and see that here. All right, so we can see that lower time frame, the market here form a structure on the, let's look at here, 4-hour time frame. And what we can see here in this area, the market has formed, okay, double bottom. The price slowly turning back to the upside here. Now there are two probable scenario. One is to keep pushing high again. I don't think that the market will be able to today to go back up and to move back up again. I think that as I mentioned, I keep eye on the wordings that I'm saying. It's, I think, okay. So trading is all about probability. It's not certainty. So always keep in mind that, guys, when you are trading, keep it based on the probability, not the certainty. So if you look at here, you can see the market is trying to bounce back up. We might see that it's going back up, and potentially could see a retest and then to reject again towards the downside. Let's see how far it might be going. Okay. Looking at okay, so here some bias to the upside. We'll be waiting for that for the market to break this high, and then after break of this high to drop back again to create a new lower low. We'll be waiting for that. looking at. Okay, so here is so we'll be looking to see how the market might be doing. Let's see here, the market forming series of higher low. Okay, so you can see the market slowly trending to the upside, and we might see, uh, this structure here we can see on the lower time frame, which is still maintaining that bullish market structure, and uh, that market structure want to see that it's going up to any of this liquidity zone. Currently it's a little slower in this area, so when the market choppy, it's always best idea is to wait patiently, because when the market is choppy, uh, any trade that you will be opening, it will be just wasted. So it is good idea to wait for the market to show its hand before we look at any entry. And in the meantime, if you haven't subscribed yet, you can do so. I do share many of the content that I'm posting every single day, and also tomorrow there will be a very important educational lesson on how to understand the breakout in the market. So if you guys haven't looked at it, um, so if you haven't subscribed yet, I would highly recommend you to do so. During the London annual session time, I will be posting a very important lesson on how to predict a potential breakout or false breakout. So understand that, that when the market is having a breakout or having a false breakout. So here is what we can see. Okay, so this is where series of higher low. Want to see it's getting extended in one direction before we see that the market return back again to the support level. So slowly pushing up, wanting to see that it's moving up. And let's see from the daily perspective. Now if you look at the daily, now I do look at more often daily, is because if you look at the daily, this is the daily resistance line here. Okay, so where when the market if the market reach that daily resistance, we might see that a rejection from the daily resistance. Potentially we could see that to happen. And with that said, let's see the lower time frame. In case the market heading to the daily resistance, I want to draw it again here. So then we definitely should see, definitely means that not certainly, high probability that the market may have a rejection from that daily resistance line. Okay, so here is what we can see, that it is trying to bounce here. Potentially we could see that it's moving back up potentially to the resistance line. So some short-term upside here. It's trending on a channel. Yeah, that's what you see, that it's trending on a channel. And because it's trending on this channel, we might see that break to the upside, because it's in a bullish channel. Yeah, so it's on a bullish channel. Robert, you're right. So we might see that uh, it's, from that channel breaking to the upside, and which we see eventually, and it might even 2630, it might cross the 2630 where there is a liquidity above this level. And after, maybe, don't press the buy button, buys, guys. It's important to understand that just a prediction, anything can happen. So we could see that a break, and then could return back again, or continuation to the daily resistance. Now my goal here is to look at the daily resistance here. So if we see the market reach that far, we we can have a very good opportunity for that downside. Now in the meantime, if we see a very strong bullish price action on the lower time frame, also we can look for buying opportunity. Okay, so we'll see that how far it might be going, and based on that we can look for trading opportunity in the market. So this is the 5 minutes and the 1 minute chart. There's a gap open. Okay, so gap open, and then the market trying to break to the upside. We'll see that. So you can see the market trend up, see that where it is heading. Based on that, we can look for trading opportunity. We'll see. So after the 20 MA retest on the 15 minutes, we can see the market trying to bounce here. You see series of higher low formation. Still, we could see some potentially upside here, and with that upside bias, expecting for the market to trend potentially in one direction. And we'll be waiting to see price action confirmation, which is very essential for us to see. So local bullish here, and so we see this sideways movement little bit, and with the sideways movement, now the market moving up in that direction, and we can see the price here is forming series of higher high and higher low. And with that in mind, what we can expect is for the price to go ahead and then to create a new higher high. We see that it's in an uptrend, and we may see that trend continuation. Price is moving to the resistance line. So yeah, you can see after this break again it started to bounce back up. Looking at here, we can see it's from here there is a bounce, so that might lead that price back to 2630 level. Okay, so if we look at the 1 minute again, we can see the market is the trend is still up, and we may see that potentially continuation to the upside, which where there is a high liquidity. So we because there is a strong breakdown, I am not willing to buy at the moment, though it could return back again. I think if it bounce, then it might go back to the neckline of this here at 2634, which is the daily resistance as well. So if we look at 2634 here, which is the daily resistance, 2633 or 34, where there is a daily resistance, and in that area, okay, so if you look at here, which is an important neckline, which is the daily which is support turning resistance, and that's where we will see that how the price might react to that level, which I'm waiting to see. And looking at again lower time frame, want to see that the market is trending in that direction. So we'll see. So when the market trend, normally I wait for a break of structure, which is the primary entry criteria for me, is to wait for a break of structure. So if you look at the break of structure, which is, for example, here there is a break of structure, which is not a major break, one candle drop, but for example here, so when you see a very strong break of structure in a strongly trending market, that's where the entry opportunity comes. If I give you an example, let's say market trending, okay, so creating series of higher high and higher low, okay, so which is an uptrend. Suddenly there was a break of structure, especially the first break. Now in a trend, so if you see the market is very smoothly trending, creating series of higher high, higher low, which is in an uptrend. And now in that kind of market, when you see the market trend creating series of higher high and higher low, and let's say the market in an trend and it didn't break any structure, but when you see that the market suddenly broken from that structure for the first time, that's where the high probability trade setup comes in play. So which is an essential part to see that the market um, trending. And after the break of structure, that's where the better trading opportunity comes, because we can look for entry in a trending market, but a break of structure from a trend doesn't define that it's a change of trend. Guys, keep in mind that this is where another very important secret to look at. When you see that the market trend, okay, so the Rome is not built in one day, as you know, that trend also not built in one day, so it's not gonna be also breaking in just a moment. Before any instrument changing trend, there are some symptom or the pattern it will show. So what are those? So for example, before changing a trend, you want to see the market has formed, for example, a head and shoulder. So we can see the head and shoulder and the breakup change of trend, or a very strong upside and then a strong downside and then drop, or in a long consolidation slowly and then change of trend. So there are some ways it changes its trend. So therefore, when you see a market is in a trend creating series of higher high and higher low, suddenly break from that structure. Okay, so in a trend, suddenly break from the structure doesn't mean that it's gonna change its trend, but you could see that it's just an opportunity for an entry. And that's where understanding the trend is very important, so that you understand that when the market is breaking out of that structure. Are you guys with me? Let's look at that. Thank you. Well, here we can see the market slowly trying to break below. And so here is where you can see with that bounce, wanting to see the market is here is you can see slowly trying to move up. Let's see. Here the trend is still maintaining an uptrend locally. So here you can see the market forming series of higher low. um, Looking at the lower time frame, okay, so we can see that it's in an uptrend. There's a gap open. Okay, so it's hitting that level that we discussed, that resistance line. So it might go there and then grab the liquidity. So wanting to see that it's going up and breaking that high to create a new higher high. So we'll see how far it might be going. And in the meantime, let's start some music here. Expecting it to for the market to bounce, and there is a, you can see this is a clean movement, and I was expecting to drop further to the downside, but we see that there is a complete rejection. But if we look at the daily, where it is heading to the daily, and I don't think that the price will be able to, which we could see, but I think that after retest of the daily resistance, we could see the price again returning back again. So there's a gap open, and wanting to see that it's it's going up to the resistance line. We'll see. So there is a you can see narrow doji, the 1 minute price action, which is potentially bullish. So there is a 1 minute bullish price action. Could look for potentially an upside here. We can see the market after this, yeah, had a bounce, so it didn't enter. As I mentioned, you can see that this candle, this is a buy candle, okay? So it's so fast that we couldn't enter. That's why the AI, that if you look at the indicator that I'm using, it's showing that buy signal here according to my strategy, and that's the AI helping us. So if we look at, you can see that if we have an automated system, it will automatically open buy from here, stop loss below this low, and it's gonna keep pushing high here. So this is where I'll be using for us to see that how the market maybe this is where the AI coming up will help us to understand when to enter with proper risk management. And you see, in each trade, every position that we open, we always use the word the risk management. Guys, keep in mind that our AI system that I'm using is the primary goal is to do the risk management. Okay, so manually sometimes we get emotional, we deviate from the plan, we change the stop loss, we do a lot of things. But when we are using the AI system, that's where help us to also do the risk management, which is absolutely important because it's automatically built in. So the strategy and the strategy is automated, so basically there's a less chance of making any difficult mistakes here. So let's see that here, and looking at the lower time frame, looking at the 15 minutes, you can see the market moving up here. Expecting is the price to go up. See that how far it might be going. So you can see it's slowly building pressure to the upside. So here is it's a bull market, and expecting it to remain bullish to the upside to create a new higher high, where so you can see the market trending, expecting it to trend. Let's look at the 4-hour again. You can see that it's there has been a rejection. So let's see where it is heading to, especially if it is coming to the daily resistance, which is nearing there to 2633, and we will be waiting for the lower time frame price action confirmation for a potential reversal. Then we can look for selling opportunity. That's what I'm waiting to see the market to do that. So a bounce, here is a you can see this is a narrow dodgy formation in that area, which is a very narrow dodgy. Okay, so you can see that after this dodgy formation, the market managed to bounce, still moving in that direction. And also the patience is key. So when we are trading, we have to be patient, because unless you are patient, um, being a trader means that you develop high level of patience, which is very essential. um, Becoming a trader being that becoming patient, guys, keep in mind that this is also an important um, aspect of becoming a trader, is to become patient. Okay, so when you are patient, you know that um, when to enter, because the market will not always give you the opportunity. It will show the opportunity uh, after a while. So what do I mean by this? If you look at the market, you'll see that 70% of the time the market move in a sideways, 30% of the time it trends. But I would say that almost 80% of the time the market move in a sideways. Only 20% of the time the market trend. And therefore the market may remain in a um, trend for a very short period of time, and understanding when it's coming for a breakout or giving the price action, it requires experience as well as the patience. And patience is the highest quality that every professional profitable trader have in their trading. So it's essential to have patience. Now if you are struggling from patience, also you can do some practice. If you think that you are struggling from patience, let us know, guys. If you think that you are, what's the reasons, sir, after testing daily high to return back, could you kindly explain, Gaurav? Okay, so that's a good question. Let's understand that. Now I wouldn't use the word will, because not certain, as I mentioned, it's probability. But let's see why we could think of the market to return from this level, from the daily resistance line. I already have posted one strategy. If you guys have looked at it, if you haven't watched it, then I'd highly recommend you to watch that. It's in the channel. So if you look at, let's say, um, this is the daily candle, right? So let's say it's a green candle. Guys, keep in mind these are the education that is completely observational, so experiential. There are two kinds of things that you can find in this world. One is the script that you have learned from the books, from your grandfather, father, mother, or anyone. The other one is the experiential knowledge. Experiential knowledge is the highest form of knowledge. Okay, so because this is where you have the direct encounter with the reality, right? The rest of the things that you are told, you have read, someone says, it's the information that is more often distorted or presented in a very different way. But the experiential knowledge that you have, that is, you have had the direct encounter or observation, that is the highest form of knowledge that you can gain. So even what I'm saying is not an experiential knowledge for you, but the reason I'm saying is so that you can cross check by yourself and then gain it as an experiential knowledge when you look at the market. So let's look at uh, these things you will not find anywhere as an education or any places. So if you look at this one, you can see this is the um, this XAUUSD 1 minute. Let's say this is the daily candle, right? So the market open here, okay, and once the market open in this area on XAUUSD, and what happened is that, let's say the market open in the early Asian session and then has gone up, moved back up certain distance, could be 180 or something like that or less than that, and then let's say in London session or NY session the market returned back again to the daily low. Okay, so in Tokyo session you could see a daily candle like that, right? Probably in the when you are in NY session, maybe you could see that candle became like that. Okay, so this is where you can see, probably you could see a candle like this in NY session. It's a daily candlestick pattern, okay, like this. Now okay, like this. That's where very high probability that if you see that price along with this one, you need price action confirmation. Once you see the price action confirmation, a very high probability that the market will go back up again. Because why? The market fear unknown, like the human being also fear unknown, right? So we fear unknown. Good morning, thank you very much. This is a very very important point. Okay, so you see that our brain always fear the unknown. The market also do like that, so because the market is moved by the human being, right? So this zone is already recently visited price action. When the market drop here during the time, once you find the price action confirmation, it's a high chance this market will go back up again. So if you look at this one here, so you can see that this, looking at the daily, where this is the daily, you can see this is the daily resistance line here, as we mentioned. So the market open initially has gone up, drop back down here to the support, bounce back up. If it is going here to the daily resistance, a very high chance, if it was longer, better, a very high chance the market will drop back again to the support level. So which you could see eventually in that zone. So that means that if you look at, okay, so you can see the market slowly turning back to the upside, where potentially we could see that return, and then from that zone we could see that it's so this is a neckline, which is the resistance, support turning resistance. A pretty strong bounce here. It's going back to the daily resistance that we discussed. We draw the line here, and expecting it to move back up to the resistance line. As it is reaching the daily resistance, wanting to see that it's hitting the daily resistance, and then once we see the market manage to test the daily resistance, we can look for entry opportunity. You'll see that So because it's in an uptrend at the moment, want to see that it's, so let's see if you can see that here is, it reached the daily resistance and now slowly turning back. If you guys enjoying the live session, give a thumbs up, make the like to 30. It's a holiday season, so I know that many of you are away from the desk, but I'm still on it. This is my, passion, and as I mentioned, our mission in Forex Trading Wizard Academy is to create traders who can trade independently, who can learn the risk management, who can develop a very strong trading psychology. Remaining discipline is very important when you are trading. There will be losing trade, there will be winning trade, but remaining discipline is very important. So with that said, as you mentioned, from the near to the daily resistance, the market slowly trying to return back. Would like to see that it's this could be a reversal pattern here, could be, and you can see with this move it's now here. If it is a reversal pattern, we might see even a head and shoulder, then it could drop again. See that how the market is reacting to this level, then we will be looking for, if there is an entry, we can look for entry based on the pending order. Thank you. Okay, so you can see that there is a rejection, so that might create potential reversal here. Let's see. So you can see that here is a rejection, so that might lead that price to that level. Let's see. And okay, I'm still not entering, just seeing that potential opportunity. Okay, so we'll be placing a sell stop in that area. If the market form that head and shoulder drop, then we will be entering into the trade. So we'll be placing a sell stop in this area. So sell stop at 2629 with very tight risk management, which is very little risk, with 26 pip stop loss. Sell stop in that area 2629. TP target 2625.93 and 2631.69 is the stop loss. So sell stop at 2629. Gone very fast. Okay, so I have to enter by market because I missed the entry point, but let me. So I've entered by market. It dropped very aggressively. The one trade, and also will be getting another one. So you can see there's a gap open, and then the drop. So it formed that head and shoulder, and then started to drop. Now we'll be holding it to see some pip gain here. I'll give a shout out. I'll tell what I'm going to do. So there are around here. We look at, so 26 pip around the stop loss. Let it drop. It might drop back to that support level. I'm on the trade. So expecting it to drop back here to the support level. So wanting to see that it's breaking below. There's a gap open, and this is a support level. So you're on a trade, and gap open. Want to see that in that direction to drop to the support level. Okay, so the price action is still bearish. So it's a bearish price action, expecting it to come back down here to the support level. So let's gain some peep here. We see that we are on a 16 peep move. So for those who are enjoying the live session, make sure you give a thumbs up. So this is also a bearish price action, expecting one or two more candle to the downside. So you can see it's slowly breaking below. So there's a gap open. Market moves very um, so here with the drop, like to see one more bearish pressure, one more downside. So looking at the, if we look at the 30 minutes, bounce back up again. Market sometimes do that, it is annoying. um so you have seen a rejection. This is basically the one that we are talking about, the from the daily resistance to get a rejection. That is with the 30 minutes. 10 minutes again. So there is a long week, and so with that long week, expecting it to come here, and because it has tested this, it's got a rejection. If you look at the 15 minutes, 5 minutes, and yeah, so the 5 minutes price action, we see a rejection. So that rejection, expecting for the market to come to fill that long wick at the bottom, which is very important. Okay, so you can see that downside. Okay, breaking below, and want to see that it's coming back. And so we have a target for here 32 pip, but at least if we can get it is 20 pip or more. So one more drop to create a new lower low that could lead that price back to the support level. Come on, it's trying to revert. So if it is the expectation here to trend in the direction, okay, so looking at again 15 minutes perspective to see this candle to form as a doji. So markets sometimes behave very normally. Okay, so we see another rejection. Great, we see some again improvement, and here so the rejection here, um, we are almost again at entry. We're expecting to see a trend here. So if the market is coming to break this swing low, we will be exiting the trade with the running profit. Dropping down to the 2627 level. Okay, so we see a breakdown here, and if it break this swing low, I will be exiting the trade with the running profit once it's gonna break below. The possibility is still towards the downside. Okay, so we see that I'm going out of the trade with the running profit. So I'm out of the trade with this one, and with running 17 pip. Will be look for re-entry once we see that further opportunity. So now from here we might see another rejection here. So we can see that here in this area, this is the 1 minute chart, and with that 1 minute chart, what we can expect, this is a red bearish engulfer. We might see further downside, but I'm out with the trade, and we'll be looking for further opportunity once we see that. So you're out on the trade, and let's look at other instrument as well. If we look at the 4-hour euro dollar, we can see that the euro dollar slowly bouncing back up. XAUSD still this one here, and you can see it got a rejection as we discussed from this liquidity zone, so it might drop again towards the downside, or we might see another bounce. For further entry, I'll be waiting a little more time. We have seen that rejection from the daily level as expected, and now we can see the market is potentially poorly tending to the downside or moving in a sideways. And we are almost nearing to the end of this session here. I strongly believe that, guys, you have found value in this live session. You enjoyed this live session. Thank you. What's your TP target? Nice trade, sir. Welcome. Thank you. Yep, absolutely. And if you enjoyed this trade, if you like this stream, make sure you like and also stay subscribed. Join the free Telegram channel for more updated education and trade ideas like this that I'm posting every single day. So with that being said, thank you very much for joining this live session. I'll see you again, guys, trading live together. Until that, stay well, stay happy. And also tomorrow we will look for I will be posting some educational content. If you guys passionate about learning and growing as a trader, make sure also you stick to that educational content to access that. Stay subscribed. And until that, stay well, stay happy. Have a good weekend. Enjoy your time. I'll see you again in the new year.